Hey everybody, welcome to Beat the Banks, our Friday community training here from Beacon DeFi. I am your host, Chris, the DeFi professor, and we're going to talk a little bit about a bunch of different topics today, but they're all going to fall under one specific piece, and that is RWAs. So we're going to talk a little bit about what they are. Give me a second, I'm just letting everyone know. About what RWAs are. Just getting the link here to the live stream so I can send this out to a couple of places. And hopefully everyone's had a great week. It's been a very interesting week. We talked about hardware wallet safety last week. I could talk about everything, but we have our Wednesday podcast, Total Value Lock. You can go back and check that recording out if you are interested specifically in what we talked about there. So, okay. So, let me grab the screen so we can talk a little bit more about what RWAs are for. And this is going to be featuring a fantastic research paper that came out today from DeFi Llama. DeFi Llama, one of my favorite, we'll call them sources of truth here in DeFi. It is where we tell people to go to specifically. So if you're looking for a website for a project, obviously you can go through Twitter. Web searches, the reason why that can be problematic is that people can actually purchase sponsored posts with malicious links. And I know that sounds crazy that actually still happens, but it does. And it's unfortunate, and I hate it when that happens. So we generally tell people, if you're going to look into research on a protocol, go to DeFi Llama first. Use the search bar, or even try Llama AI. Shout out to NGMI, to Patrick Scott and the group out there. And you'll learn a little bit more about the data that comes in through a lot of DeFi protocols, which is so important to grab. I like using DeFi Llama, again, for the source of truth on finding out not only which chains have the most TVL, but for each protocol, just a little bit more information about their team, about their current total value locked or TVL, anything else that's out there. But we also recommend the swap. And let me see if I can find the swap here. DeFi Llama swap is the swap that we recommend. Yeah, Llama swap. Let me open that in a new tab. I really should, let's pin that to, there we go. Now you can pin that to the net. See, that's something I just should have done a long time ago. But the reason why we like Llama Swap is that, at least if you're on EVM chains or Ethereum based chains, I don't think Solana's on here yet. Nope, there's only specific EVM chains. You get to aggregate the aggregators. So there are multiple aggregators that are out there. Kyber Swap, Odos, Matcha, 1inch, Paraswap. There's a couple others that are out there. All of those will aggregate the best routes that are available for trading between two assets. Like, for example, let's just switch this to Arbitrum and go ETH to USDC. ETH to USDC. See, it shows here. It shows each of these are aggregators that actually aggregate the best trades that the best routes they can find between the two assets for that trade. This will aggregate all of those aggregators. So that's why we recommend this the most to newer users or even just regular users, because you're going to get the best return and the specifically the one with the cheapest gas. So that's the reason why we really prefer Llama Swap over everything if you're going to swap. Especially in a world where you can actually just do it within the app. Like, let's say you're using Rabby, let's say you're using MetaMask, even Phantom, for example, to do swaps. You can do them inside the wallet themselves, but you're going to pay a premium for doing so. Llama Swap, I'm not completely sure how they make money off of this. I'm sure there's a kickback that comes back to them, and it's well deserved. So having a swap that aggregates the aggregators is the reason why we use them. Anyway, let's talk about today's specific topic, which is RWAs. And well, let's get this going. You'll have to bear with me. I'm on a little bit of a VPN vacation, so hopefully things aren't too terribly slow. But sometimes that can kind of just be a thing that happens. So RWAs, they stand for real world assets. And the best way to describe what a real world asset is, or an RWA, because it is in a way a wrapper, a digital asset, a representation of something that is in the real world. Well, reason why it's called RWAs. And one way you could look at it is when an asset that is tangible, or something that's in front of you, or something that you look at today in the real world. That's it. I'm trying to think of a better way to frame that. But if you give it a digital twin on a blockchain, that's generally what RWAs represent. And RWAs, if we look here at the map that we have here from DeFi Llama, zoom in a little bit here. Two big things that you may want to consider that make it really interesting. And let me just, I think this is, yeah, this should be updated. The total RWA on-chain market cap is $27.5 billion. That's a lot of money, meaning that there are assets that are representing, they're digital assets that are representing assets that would be in traditional markets on chain, on a blockchain. That's a lot. Actively in terms of DeFi, in terms of decentralized finance, in terms of blockchain ecosystems, with strategies, 2.3 billion in terms of TVL. Perps have an open interest of 2.05 billion, which is also a ton, with 164 total asset issuers. That's actually a tremendous amount from where we were even 18 months ago. As you can see, 18 months ago, if we take from where we are now, yeah, maybe around here, we were still in the early process of where we are now. November of 2024, the total market cap was only 3 billion. Look at how much that has grown in the last 18 months. And it's only going to get bigger. And the reason why I'm talking about this today is specifically for the idea that regardless of how terrible the most recent rounds of hacks are and exploits, DeFi is going to survive. DeFi is going to iterate, security is going to get better, and as we've been talking about over the entire year, this is the year of integration for DeFi, for traditional finance, to start integrating DeFi rails, composability, RWA mechanisms, all with what they're doing in traditional finance, bringing it onto a blockchain. Clarity Act looks like it might possibly go through this year. That'll be a huge catalyst for bringing more of this stuff on chain. ETFs are a considerable vehicle for this, whether it be, and also digital asset treasury companies, so DATCOs. So you can buy stock in a company that whose purpose is to buy digital assets on chain and hold them. In general, around one or two assets, but generally it's just one asset. But there are multiple companies who have multiple assets that they're stockpiling in terms of the treasury. Now, let's look at the different types of RWAs that are being tracked on chain, at least here at DeFi Llama. So shout out to DeFi Llama for putting together this fantastic just charts and just this page for RWAs, just to kind of show you exactly what we're talking about. We're talking about agricultural commodities, so things like wheat, rice, corn. I've seen chickens be tokenized. Fish have been tokenized. Natural gas is a commodity that's been brought on chain as a tokenized model. Just regular commodity baskets. So if we're talking about like U.S. energy, for example, or U.S. oil, multi-asset RWAs is probably one that a lot of people are interesting because you get exposure to a bunch of different classes of assets that way. And then commodities, we're talking about oil, we're talking about energy. There's a variety of things that fall under commodities, to be honest. Industrial metals, I guess that's like steel, titanium. Commodities can also be precious metals to a degree, if that's how this is being looked at. Oil, I guess, is its own separate thing here, but it is technically a commodity. Carbon credits, very interesting. So there's a movement for regenerative finance to have more environmentally friendly on-chain tracking. There could be probably more work being put into it in terms of like attestations, regardless of how you sit on the carbon credit spectrum. Like if you think it's a complete scam, or if you think it's something that actually could be useful, having it on chain, on a blockchain which is both transparent and immutable, I think is a really great vehicle for that. And I think for a lot of this stuff, a lot of companies who have looked at, using blockchain for things like immutability, for transparency, Amazon and Walmart have looked into it specifically for supply chain and logistics, because it's an easy way to track that in a transparent way. Equity ETFs, equity indices, and again, these all represent real world assets, or assets that are currently out there. So that's why that they're here. I will talk about, I won't talk about them today, but I'll mention reinsurance is probably one of the hottest markets right now, specifically for just a digital commodity. Reinsurance is, yes, insurance on insurance. And I know that sounds redundant, but reinsurance actually is a really hot market if you're looking for, if you're an investor specifically, an accredited investor, if you're looking for a market that has some interesting passive yield strategies. Reinsurance, even in the regular world, through regular brokers, offshore brokers and stuff, can be fairly lucrative. And we're talking about reinsurance in certain areas like that are like flood prone, storm prone, earthquake prone, volcanic eruption prone. Having money in the reinsurance game so that you actually get yield for when things don't happen is interesting. It's very interesting. And I think we're going to see an interesting move with reinsurance. And there's a couple of different groups that are doing reinsurance. Shout out to Henri specifically. And there are other groups that are starting to build tokenized markets, tokenized liquidity patterns, stuff like that. That'll be cool. Real estate is another big one that's available on chain. It's not one of our personal favorites, if I'm being very honest, mainly because when we're looking at groups that have tried to do tokenized real estate, and there's plenty that are out there. There are some that are really cool. Like there's been NFT projects where, or even things like Protocol and Liquidity or VE33 projects where funds were used to purchase distressed real estate, and then they renovate the real estate, and then as those things get rented or whatever, then that's where that money comes back into holders. It's not a huge gain in most cases. Like, well, we had CoreDAO on the TVL, or actually we had it on air with Beacon Twitter Space where we talked about it specifically. And they had they have an NFT market called Blocks.gg, and I think the group is ASNX. I think is what they're called. I'd have to double check, but if you go to Blocks on Core, there's a group that's doing property management, and they actually sell fractionalized pieces of apartment complexes. Two of them are in areas with a lot of military coverage, so apartment complexes that are near military bases. So they're going to be in constant use because you have people being stationed, in different cities. So then you can go and get it. You have to mint an NFT, which will give you a fractional ownership into one of the apartment units, and you actually earn part of the rent that they pay. And I think the ROE is roughly about 7%. It's not amazing, but it's not bad. So if you're looking and you diversify your portfolio with stuff like this, these are mechanisms that can grow and grow quickly. So the idea of having RWA based yield is actually really compelling. And imagine if you could do this for things like mining farms. Um, Cars, car loans specifically. I know that in Texas, there are places where you can actually buy into third-party dealerships, where it's like a a regular mom and pop type of location. It's not a dealership, and you can help buy into to loan packages. So as people get financing, you're part of the syndicate that gives them that approves money for them to take loans out on cars. So you're in that way. There's a lot of interesting ideas that you can do with regards to RWAs and how they work, and bring them on chain for a new type of yield opportunity. So it's all a matter of people building these systems, but RWAs are going to be a very important part of how DeFi works moving forward, because people like Larry Fink, who's the CEO of BlackRock, believes that everything should be tokenized. Stocks, equities, bonds, everything should be brought on chain. And I think in the next 3 years, it will be. So why not learn a little bit more about what it means today to kind of get into it? So precious metals, so gold, silver, copper, titanium. Bonds, also big. Look how much of that is there. And then precious metals, and then what's the other blue one? That's the total active market cap. So I guess bonds are probably the biggest there. And what that means are treasury bonds. So T-bills, US T-bills. Probably the largest backing of RWA stablecoins that are out there. So for a lot of traditional investors, they've often flocked to T-bills as a great way to get passive income. Why? Because they're normally guaranteed 4 to 5% in general, especially in bear markets. It's a place to go to get decent yield. Now, there are minimums that you need with that, but you can get all this stuff on chain, and I'm not gonna say bypass those things, but it's certainly something that you can do to not have to worry too much about regulations. And the thing about DeFi, again, nobody owns DeFi with regards to jurisdiction, with regards to countries. Now, your on-ramps and off-ramps can be regulated and monitored that way. But when it comes to pure DeFi, being in the mesh network of computers that make up these blockchains and validator networks, no country owns them. So that's the key part of understanding how much this market can grow. I mean, the fact that we're already at 27 billion of on-chain market cap, when at the beginning of last year we were only at 4.8 billion. I mean, that is a ridiculous number that it's grown to, and it's only going to get bigger. I mean, the idea for the stablecoin market cap to eventually hit 3 trillion within the next 3 to 5 years is not that far-fetched. So a lot of these RWA stablecoins, like the T-bill backed ones, are going to make up more and more of the stablecoin market cap. So it should be exciting to see if you're curious about that. Now, again, we're here at DeFiLlama.com. If you scroll down, you can see some of the asset rankings just to get an idea for what some of the most popular RWAs that are out there. So there's two major gold providers when it comes to assets that are backed by the price of gold. Tether is by far the largest. In fact, they're one of the biggest holders of gold, period. All those quarters of making billions of dollars of profit, they've gone to go buy US T-bills. They own more than a large majority of the world in terms of owning US debt. And then they also have bought precious metals and a variety of other things. Bitcoin and other things are a part of the portfolio as well. You can go to Tether's website to see exactly what they have backing the coins. Paxos is another. Pax Gold, Pax G has been around forever. So that's it's good to see that they're here. And then we have USYC, and then we also have BITL. And wow, USYC is already at 2.9 billion, and that's from Circle. They're the same group that has USDC, which is their centralized stablecoin. USYC is based off of T-bills. You can definitely see the asset group here. Again, this gives you an idea of what everything is here. Maple Finance with Syrup USDC using private credit markets to back their RWA stable is interesting. We'll see more as things move forward. Now, BlackRock's Biddle, which is on 9 blockchains now, and then Ondo, also on multiple blockchains. Two really big participants specifically in the RWA space. Looking at some of these, if I just keep kind of going down, you can see some of the other stuff that's here. Variety of things here. There's reinsurance. So looking at the different types of asset groups, that's the important part here. This is not a fly-by-night idea. This is robust. This is well tested. There's billions of dollars in assets in liquidity already into the system. So for everyone who keeps saying that DeFi and crypto is funny money, guys, this is real. This is here today. Institutions have front-run retail, as they should have, I suppose. And you have a lot of choices here with regards to what RWAs are. These are no longer just vaporware that are just kind of sitting up there in the ethos. These are all fully backed products that are going to bring, the next, the future of what's going to be available. Sorry, I'm just taking a second to pull up if there's any comments. What I would like to do, if you are on Twitter, Twitch, or X, YouTube, Twitch, if you'd like to like and follow and subscribe, would really appreciate the help there. I'm trying to hit some milestones, just getting the algorithm so that people can understand more of this information. My goal is to make sure here with Beat the Banks that you're able to get into the mode of self-custody, understand that you don't have to go through a broker for stuff like this. You can custody all these assets on your own, and you should have the freedom to do so. And that's the biggest thing that's the most important. So yeah, RWAs, going to be a huge part of what's going to be happening in the fabric of the story of movement to on-chain digital markets moving forward. And again, RWA assets, for now, you can consider them to be digital twins of assets that are available to you in the quote-unquote real world. But this is an on-chain representation of them. Soon, once the mechanisms are in place, and one thing too, if you want to link to, if you can just go to DeFi Llama's Twitter or X, and they put out this fantastic state of RWA finance, RWA Fi. Check it out. Really great read. I haven't read all of it yet. It's 84 pages, just so you guys know. It tells you a little bit more about the biggest tokenized commodities that are available. They're also talking about tokenized stocks. And that's another thing that's going to be huge, is the moment that we actually see tokenized stocks come on chain, which is not quite here yet. But imagine being able to hold your favorite asset that you have dividends in, right? So the aristocratic list of the 25 companies that have had constant growth in dividends for the last 25 years, that type of thing, like groups like Walgreens, Coca-Cola, Costco, and some of these others that are out there. To be able to claim those dividends on chain is going to be an amazing time. And that's just that mechanism. In addition, because we're introducing these on an on-chain environment, that means you're opening up things like staking, liquidity provision, concentrate liquidity, hedging, delta neutral plays, fixed rate farming. There's a variety of different things that you can do that are DeFi based mechanisms now that we're going to bring these things on chain. Now, to answer the question, was that the intended use? That's a different question to answer. I mean, obviously, I don't know. I mean, is it cool that you can go to something like BuyReal on Solana and have a liquidity pool of like Tesla USDC, where you can do a concentrated liquidity range and earn 119%. And this is on a 10% swing, so 5% up and 5% down from the current price. Even at 10%, at 60%, that's a fantastic APR, guys, to be able to just trade this range or earn off of every trade on chain between these two assets and earn. It's actually fantastic. This is using X stocks on Solana through BuyReal, which is a perp dex / AMM entity would be the word I would use, from Bybit, which is a major CEX here in the space. They also do the Mantle blockchain as their layer 2. It's really cool. Looking at places like Pendle, which have, and I've filtered this against RWAs, just seeing the number of different fixed rate farming. And again, I don't really talk about YTs in our content, but just from a PT standpoint, looking at something like, let's look at RWASD, which is a stable coin available on ETH mainnet, based off of, it's a yield-bearing token based off of RE.XYZ, which is backed by T-bills and delta-neutral ETH basis strategies. Fantastic, right? And this is a fixed rate thing for 61 days. If you get in and you hold it for 61 days, you'll get 9.51% back on your money. You're not locked into that, by the way. You can always check out we've had a couple of things where we talk about what we call our DeFi CD, which is what this represents, is like a certificate of deposit type program. Because you'll get this. So if in the event that the price actually goes up, the rate goes up towards the end because you're getting in at a discount here, then you actually can withdraw at any time. So let's say that, for example, on let's call it day 55, because the maturity date for this is June 24th. Let's say on June 19th, the rate for this is 15%. You can withdraw, and you get your yield back as whatever the market price is. Conversely, let's say that the rate for this goes down, and then suddenly it's at 6%. Well, guess what? Because you signed up on today and it's a 9.51%, you're going to get on day 61, the day of maturity. Make sure you always do this before it rolls over. You'll get 9.51%, which is going to be an improvement over the 6% that it currently was on that day. So, to reiterate, there's no lock on this stuff. You can withdraw at any time, just at market prices, but allows you to take advantage of if you want to call it a fixed rate farming mechanism, it is something you could compare to that. And then of course we have perp dexes. Trade.xyz has the official S&P 500 perp, but they also have ones for oil, whether it's Brent or WTI, and they also have one for, this is trade.xyz. Markets.xyz has one specifically, I think, for energy. TradFi perps. There we go. So there's silver, there's gold, there's Intel, Nvidia, SanDisk, MicroStrategy, or just Strategy, Robinhood. So it's cool. These are technically perps, so those are just synthetic assets. But the idea that soon these tokenized stocks will be a reality, so that if you are trading these on chain, which is happening soon because of New York Stock Exchange and NASDAQ coming on with 24/7 markets with 24/5 Oracle pricing, is going to be a huge thing. No longer will it be the markets close at 4:30 on Friday, and then you just kind of hope and pray that it looks good on Monday morning. The markets are going to be open 24/7 soon, to feed the appetite of global audiences, right? So this is all part of just the future of finance, guys. And that's why we talk about it here on the show. All right, let's come back here to, so just kind of talking about the different commodities that are out there. Let's see. Regulation is a big thing. The Clarity Act will help with that. But with the way that the Clarity Act is working out, the guidance from the SEC and the CFTC, probably the bigger play right now, the bigger important pieces of policy that are being laid out. And so if we go to tokenized stocks, and of course they're going to have an ad here for X stocks, which is owned by Kraken, by the way. And what's cool about this is that they're actually giving you models on how the pricing and just how the value is actually maintained, which is cool. X stocks shows you how DTCC tokenization with securities are going to work. This is still being built, but once that's all done, this will probably be the biggest contribution to bringing as many things on chain as possible, because DTCC will have that, and hopefully it's available on Solana or maybe an Ethereum blockchain. They're working a lot with Canton Network, which is CC for institutions. So we'll see exactly how the stock tokenization process, and again, this is why this is so powerful in terms of the research that DeFi Llama has come together with here. Definitely something to read if you're curious about how this is all going to take place, how the tokenization happens, how it's maintained, and hopefully we'll have strong security on the backside to make sure it can't be exploited. So yeah, for today, and this is something that's kind of, yeah, it's definitely shown here. Bonds or tokenized treasuries is the biggest part of what's going on right now. You could almost say that they're almost a safe haven of RWAs. Precious metals and other commodities are going to be next. That includes gold, silver, things like that. I know the question that some people are going to ask is, what's the difference between an on-chain version of gold and me owning a gold bar in my vault here in my basement, right? Because both have a significant amount of value. What I will tell you, and this is part of the argument, I guess, that ex-CEO Binance CZ and Peter Schiff, they had a debate on which is better, gold or Bitcoin. And the biggest thing about Bitcoin that was given, because Bitcoin's kind of treated as a digital version of gold, right, is that with tokenized products, because they're available online, they should be able to have a digital signature or an attestation that can tell you exactly how authentic that asset is, right? Especially once it's tokenized. This is tokenized based on this piece of gold that's sitting physically somewhere. So that value is tied, that value is attestable. Whereas if you have a gold bar in your basement, you're going to have to go through some work to verify and prove that it's A, authentic, and B, that you own it. Pain in the ass, if I'm being honest. The digital version is much cleaner, much faster, and easier to liquidate should you ever need to do so, as opposed to holding an actual bar of gold. Right? There's actual physical safety concerns. If you're holding a bar of gold and you bring it somewhere where your safety could be in question just because someone wants to $5 wrench attack you or something, right? But the other part that we haven't talked about here that's going to be key, and it's available here in places like, bad way to think about it, but at some point when you go through an issuer that issues RWAs, is that you have fractional ownership possibility. You don't have to own, with digital commodities. You don't have to own one of them, right? I don't have to own one bar of gold. I can digitally own 0.0005 parts of a solid gold bar and earn on that, have value in that. That's the key. Same thing as I mentioned with the apartment complex example for RWAs, or even things like car loans, things that are out there that can be fractionalized so that multiple people can come together in coalition to own a piece of a yield-bearing asset, or whatever that might be, right? I use yield-bearing asset as a very loose term there. So that is the key part. That is probably the least talked about part, is that the ability to have a fractionalized share of something. Now you can do that now, right? With stocks, there are certain groups that will allow you to buy fractionalized shares. It's just not widely available to everybody. Here on chain, you can fractionally own something by nature today. You can own, it's the dream for anyone to be a whole Bitcoiner, right? But most people don't have a whole Bitcoin. If I'm being honest, most people don't. There's a very select few whales that do, and they're in the upper echelon. But the majority of the rest of the people in this space have maybe like 0.002 BTC or 0.0002 BTC of a fractional part of the asset. So that's the best part about having these digital twins and just the digital asset here, is that you actually have the ability to own a piece of it and not necessarily a whole. You can certainly move up to that, right? As you earn, and like you're earning 60% on this, right? And that part's cool. Same thing here with stuff like this. You don't have to own one. I mean, the APRs here are based on the price of one of these at maturity. So now, the question is, would you want to put all your money into this right now? The answer is no. You should never put 100% of your bag into one thing, right? It should be part of a healthy, diversified portfolio where you are not fully exposed and overinvested into any one asset class. The reason is because, let's be honest, things can happen. Just looking at this Kelp DAO layer 0 debacle. Smart contracts weren't hacked here. In fact, all of that security, all of the things that have happened, the money laundering by North Korea through Thorchain, all that stuff has worked flawlessly. And that's by design, right? That's how DeFi works, is trustless and permissionless. The problem is that and how they created the exploit, they went after something that wasn't as secure as smart contracts. So when we talk about code as law, as we have on this show multiple times, it's great because and I use that in a very loose way. As things get exploited, the system gets more robust. It gets stronger. These are the things we want to see. And that's just in smart contracts and things specific around those. Because it's getting harder and harder to hack smart contracts based on human error and things like that, bad actors, for example, the North Koreans, went after something that was less secure. In this case, it was off-chain infrastructure, because they poisoned RPC nodes to trick the decentralized validator node, the DVN, that Kelp DAO was using on the layer 0 bridge to accept and mint across a 292 million transaction of RSETH. Now, my point is, if you were 100% into this RSETH or just something like that, then yes, you'd be absolutely in pain right now. But, like we say with everything, you never want to be over-invested. You want to keep a good allocation, whether it's the 40-40-20 or the DeFi barbell that we talk about. You never do 10, you're not supposed to do more than 10 to 15% in one protocol, for reasons like this, because we're never completely sure about the security. There are bad actors out there looking all the time. But the good thing is we have good white hat security researchers as well, who are trying to also ethical hackers, if you want to call them that, hacking through like they do with regular Web 2 and other industries, trying to cover bug bounties and just making sure that people are on the up and up with their security. We need more security researchers out there. So if you're ever looking for something that you can get into, security researching is always going to be something that's needed. So if you're interested in RWAs, the reason why you can count on them more than banks is, again, banks are closed on the weekends, most of them. There's some that are open on Saturdays up until like 12 to 1 p.m. But overall, your settlement will always still be T+1 or T+2, right? It's never same day settlement unless it's a specific thing. RWAs, away. I mean, right away. Instantly, I would even say. Now, there's a caveat to that, right? Depending on how you get on your money on chain. Like, for example, on Coinbase, you purchase an asset. You may not have access to it for 5 to 7 business days because of settlement. Not only does your ACH have to clear, or your wire has to clear, they then have to settle the funds, and that takes time. That's the old guard, right? Once that happens and everything is snappy, it'll be instant that you'll be able to get to this. And you'll be able to trade, you'll be able to do strategies on your assets any time of the day, any day. And that's the promise of digital markets, that's the promise of DeFi. That's the reason why it's the future of finance, the future way we're going to be doing business. Because you should be able to have access to your money at all times, and having self-custody is the way to have true financial freedom. Now, a couple of things that I wanted to point out regarding how you want to do your research into what you want to put your RWA hopes into, right? The key for the majority of these groups, because they are digital twins, isn't necessarily the liquidity, but it's the proof of reserve. Well, it is liquidity. So the proof of reserves, the transparency behind that. When you're looking at different groups, for example, let's pull up Athena. They have proof of reserves specifically not only just for USDE, but also for their USTB protocol. Anyway, this is the type of stuff you want to see. If you're going to be looking to a protocol, whether it's BlackRock BUIDL, which is fine because obviously they put all that online and even on chain for you to verify. Same thing with Ondo. You just want to make sure that the group that you're going with that's providing the backing for your RWA collateral has proof of reserves, has the transparency necessary so you know exactly what you're looking at. If they don't provide that, then it is not in your best interest to put your money into that. Now, because it's still so new, let me see if I can find a thing for X stocks, and I'll do the right thing and show you using DeFi Llama how we do this, right? So if I'm curious about X stocks, notice I just searched for X stocks there, and then I could use Llama. I haven't used Llama AI yet, just so you guys know. You can pay for the pro version of DeFi Llama. If you want to support them, I'd highly recommend you use that method. You can have custom dashboards, which is right here, and a lot of other things that are available under premium. I guess Llama AI comes with the pro. Sheets, Llama feed, downloads. Didn't even know that was a thing. But that's really cool. DeFi Llama has come such a long way. And again, if I wanted to learn more about them, I just checked up I look up at their profile. As you can see, total value locked 390 million, which is good. And then you just click on the website portion, and then you can check to see more about how these things work. And look, they have proof of reserves. That's great to see. And there are looks like there's 22 pages. So they have a wide variety of stocks that they have here. This is cool. So the moment that we can actually have this in a tokenized form so that these shares, these stock shares that we buy, are equal to what you would receive, like a certificate of ownership, right, that you get from investor relations. The moment this all comes to a head, which is going to be very soon, they've been working on this for quite some time, that's when things are going to change, I think, because you're going to have everyday access to this stuff. And again, I don't know exactly how it's going to work. You may have to KYC, which for most people is fine. Something that we think that's just going to happen, right? But there are people who still want to be anonymous, and I can understand that. And there's... Anyway, outside the scope of today's call. Yeah, imagine a world where these things are now just on-chain, right? Instead of using a broker, you would use an institution, a risk curator, a risk manager. You don't have to talk to them, but you can just utilize their services for what they're doing and do liquidity swaps, concentrate liquidity, hedging, whatever's out there that's available. Because the beautiful part about it being in DeFi is that they're now composable assets. So not only is this an asset that represents something in the real, in the traditional finance world, it's also a token, which means at least on Solana, if you are a token, there's access to these token extensions you can do access blacklisting, you can do privacy transactions, you can do a wide variety of things. I think there's 30 plus different token extensions that are available to Solana tokens. But it also makes them composable, right? Because you can actually take the asset, and now composability we like to call money Legos. Combine them with other assets to create new strategies. And I think that's going to be the biggest gotcha, or rather light bulb moment that most people are going to get once they finally get into this. Like, oh wow, I didn't even know that I could do that. That's so cool. And yes, that's going to be so cool. Soon you'll be able to make your own custom basket of assets, create your own spot portfolio using an index you create yourself based off of like 3 to 5 assets that you consider your long hold assets, and you gain a specific yield off of those based off of how those things are performing. These are all things that will be available in the future. These are things that are very, that I think is very bullish for the future of not only just self-custody, but the ability to customize your financial experience, customize your investment portfolio to a very granular degree. And this is the type of control that we've always wanted, right? Before, we used to have to pay someone who you prayed had a really good education and has your best interest at heart to take your money and go out and do good things with, right? I know that's something that people still want, but imagine a world where you had the control, the self-custody for that. And I'm just talking about what's available today. To be quite honest, in 18 months, this will all be agentic. AI agents will be taking care of all your trades for you. So there's no human in the loop, which is probably what most people want anyway. Increases capital efficiency. It also increases the chance for, it decreases the chance for human error, obviously. But it also brings in capital efficiency, speed of settlement, things like that, because robots don't move at the speed of humans. They're much faster, and what they're looking for is that speed. And Solana and some other blockchains that are out there are very well suited for what's going to happen in the next 3 to 5 years. So it's an interesting time, right? RWAs are coming to the forefront. They're a huge narrative right now. We're going to see more and more things tokenized, and then with the AI piece, with AI agents, easier and more strict security regulations, whether through U.S. policy or just policy that's drafted by the ecosystems to make sure that bad actors can't come in. And there's a lot of layers between what actors can actually access versus what us as users and active market participants can actually place our capital in. The tokenized stuff is actually going to be very, well, I don't want to be on record saying it's going to be very difficult to hack, but there's a lot of layers here that they're not going to mess with. That's just kind of the way that's going to go. But really excited to see what the future entails. So hopefully you found some good value into that. Again, please like, subscribe. Please recommend this specific video to anybody who's curious about what RWAs are. Again, use DeFi Llama. A fantastic source if you're looking specifically to track just how meteoric of a rise this has been just in the last 8 months. It's just a huge amount of interest, a huge amount of attention being given to having on-chain representatives of assets there. Now, I didn't really cover too much of the security piece. Most of this is worked out and it's at the institutional level. But the one thing I would recommend is, regardless of what group you go with, make sure they have proof of reserves, make sure they have transparency with the assets that they are bringing on chain, because that's what matters. You want to make sure that groups who are willing to take your liquidity, for that you're going to be leasing your liquidity to earn an incentivized yield by providing to their protocol, has the transparency and the backing that you should at the very least request to get a look into. If it's not readily available, that's a red flag in my opinion. But sometimes, especially newer companies, are still looking to bring all of that together. With that said, one thing that I say in my content all the time, everything is high risk until they prove to me that they're not high risk. So just be vigilant about security, press everybody with questions. People understand, especially in this space. I get why people are paranoid about security and why people will ask questions about security first over anything else. And it's true, it happens all the time. People are asking questions, well, what about this? And good teams will have answers for all of those questions, or at least be willing to talk about it. So there's that. So I guess we could talk about the whole point of what are going to happen to banks. Because, you know, this kind of stuff beats the banks, right? Banks will still be available. Banks are still heavily involved in the process. They're going to be for ages, because this infrastructure still relies on banks being an on-ramp for customer loan deposits, right? It always, well, I'm not going to say always, it will be that way for a very long time, because there are a lot of people in our society who don't trust computers, or B, they don't know how to use computers. So they will go through a third-party intermediary to make sure that their money is safe. So banks will be more depository nodes, I guess would be the word I would use, in the future system, as a physical, real-world on-ramp and off-ramp for your funds. The point of this series that we've been doing since January 22 is that there's an idea that you can be that person. You can be your own bank. With that said, feel free to go to our website, and that is school.com/beacon. Absolutely free to join. Join the many who have come through. Check out our Start Here post to get a message from myself and our CEO, Andrew, and more about our different offerings that are available. We have plenty of free information that's there, but we also have offers that if you need one-on-one mentorship, or if you want access to the latest rates, if you want to be amongst the best of the best in our mastermind, those are all available. And I want to say thank you, of course, to our Beacon Mastermind founding members, our current Beacon Mastermind members, our Beacon Challengers, as well as our Spotlight subscribers for helping make all of this possible. Again, school.com/beacon. And again, we do this show every Friday, 3 p.m. Eastern. Hopefully found great value in today's talk about RWAs. If you did, please hit the like button, subscribe, send to your friends. We greatly appreciate our content being distributed out there. Help people keep people, sorry, I can't talk today. Keep people safe, secure, and educated. Those are the three things that are the most important. Education is one of the most important things that people can have because there's so much misinformation out there. We've been in this space for many years now, and we've helped tens of thousands of people become crypto natives, DeFi natives, and just self-custody heroes. And self-custody maxis are my favorite type of maxis. With that said, take care. We'll see you next week. And be safe out there. If there's one thing you take away, there's so many bad actors out there. Stay safe. Don't fall for the traps that are out there. And we'll see you next time. See you on the show. Beacons up. Banks down. Keep beating those banks, guys. We'll see you next week for Beat the Banks.